Hey everyone, I'm going to make a quick video on how to play swing failure patterns. This is, in my opinion, if you are looking for an entry and you missed the pump or you're looking to short, this is the easiest way to get into something. Now, it's not always going to play out, but I'm going to show you guys how to take a look and see when you can spot these patterns and when to get into a position. But to get into these, right, you're going to have to set alerts on your charts, and make sure you're at least watching price action, because these are going to be usually a market buy or a market sell order. It's not going to be limit sells or limit buys. Okay, so what you're looking for is, let's do a bearish, actually let's do a bullish swing failure. So what that is, let's look at Bitcoin for example. You have a range here, right? And you're trying to get into, or you want an entry into, whether you want to long something, right? So this range hasn't been broken and you're looking to get into it, and there is a lot of swing, or what you call swing lows. Okay, you have one here, right? You have one here, okay, and you have one here. What these are, I'm going to remove the box, but what these are is, this is the swing low after a move was made up, right? So here you have a swing high, right? Here you have a swing high, and here you have a swing high. And this is the current swing high, but you're looking for a sweep of the lows, right? So this is your swing low before the swing high, okay? And there is liquidity here. So whether you want to get long, you want to see a clean sweep of this liquidity here. And by that I mean, come here, go down, and then reclaim back above the swing low point, all right, which is this. And this is exactly what happened here. We, had this little wick down here, we went higher, right, and then we came back down and we swept all of this liquidity below this low point, and then the candle, 4-hour candle, closed above. Okay, so this bounced on it, we went higher, right? This wick came and closed below, right? Or no, sorry, took liquidity below and closed above this point, and that would have been your market order trigger. So what you would have done is, once the candle closed above, right, it closed here, you could have market bought here and place your stop loss below the swing or this wick here, right? That's where you're going to place your stop, and then you'll take profit on the way up at resistance levels. So for example, you'll take profit here, right, here, and so on and so forth. So this is a clear example of a swing failure. There's liquidity here, right? Price came, took out the liquidity below, we cleared it, reclaimed this swing low point and closed the candle above. You could have market long there, place your stop loss below. It did come close to it again. This is a very tight stop loss, about 1%. But if you would have bought there and placed your stop loss, you would have gotten a 2.5% move. Okay, now if you're talking about risk to reward, it's about a 2.4 R trade. Okay, and same for the other side, right? Here was your previous swing high. You had this one here as well. But notice how this wick here, this candle closed above. It did not go up, take the liquidity, and close below. If it had done so, you could have market shorted, place your stop loss above here, and then you'd play it. But because it did not close below this swing high point, it's not a valid swing failure. It did not happen. But here it did. Okay, you have a swing high. This candle, this wick went up above, took out all that liquidity, right, and closed below. Now you could have market shorted on the 4-hour open of the next candle, place your stop loss above that wick, right? And TP levels are up to you. But it's almost a 2% risk, and if you had done so from that entry, you would have gotten a 5% move down, right? So that's how you play the swing failure on the upside and the swing failure on the low side. Now, I personally like to have them retest the swing high and the swing low point. What that means is, yes, you might have missed the entry here, right? But you wanted to see it go back up here and reject. So go up, it can wick above again, right? But you want to see the candle close below. You'll go ahead and mark it short, still place a very tight stop loss right above the swing or the new swing high point or that wick, and you would have gotten a nice move down. Now, if we're going to take a look at a different coin, let's take a look at Mana here. Right? So this here was the swing high. This candle took out the highs, right? Closed below. On this next candle here, you could have market shorted. Place your stop loss above the wick, right? And you got a nice 4-hour trade, right? You'd have taken profits at support levels, right? So that's a swing failure that played out right there. Now you have this one as well, right? Here is your swing low, but so this one right here is a support level. But see how like this one's close to this? This is your swing low. This candle here went down, took the liquidity, but closed above this swing low level. So on the next candle, you could have market longed. Stop loss would be very tight below that wick, right? And you would have gotten a nice 16% move or a 10-hour trade. Okay? This candle here has not taken out this new swing high level. So this did not fail, but this was resistance. Rejected again, came back down. Let's take a look at this this coin, TWT, Trust Wallet, I think it is. Here was the previous swing high, right? Now this candle took it, closed below, and if you had opened up a short, right, and placed your stop loss above that wick, you would have gotten stopped out. But if we go to the daily, on the daily, this was a swing failure, right? You had the swing high. This candle went up, took the liquidity, closed below. If you had opened up a swing or a short on the next candle open, right, place your stop loss above. Very, very wide stop loss, but you would have gotten a nice move down. So that's the other point of this swing failure move is there could be a swing failure on a lower time frame, right? Just like that we saw in the 4 hour. But on the daily, it's not a swing failure yet, or vice versa. It may be a swing failure on the 15-minute, but on a higher time frame, it's not a swing failure, or it might be a swing failure on the high time frame, but on a low time frame, it's not a swing failure. So it's, in my opinion, it's best to play these on the 4 hour and higher. If you're looking for a scalp, you can look for it on the 15-minute. But just know that they're not always going to play out on lower time frames, and higher time frames will have a more concise you know uh, data point that you can go off of. So this one you would have taken the stop, okay? You'd have taken the 3% stop, but if you would have gotten stopped out on the daily, if you had reopened the short on the next candle, you would have gotten a nice move and made back your losses. If we were taking a look at, for example, injective, right here was your swing high. This candle went up, took the liquidity, closed below. Now here is that retest that I was talking about, right? If you had opened up a short here, you place your stop loss above there. But this retest right here gave you a better entry. It went and rejected, closed below. Your risk is a little bit smaller, but you'd have gotten, so far a 1.3 hour trade, right? And same with here. You had your swing low here, right? This candle came down, took the liquidity, closed above. You could have opened up a long there with your stop below the wick. Very, very wide stop loss. But you would have gotten a 22% move to the upside on a 2.4 hour trade. That's how you play swing failures. Um, it's very, it's now these are again, if you missed the big move up or you're looking to short, you want to find triggers and not just set limits. So you have to set alerts, right? You can, right click, add alerts on the trend line, or right click here, right, add alerts to wherever you want to go, add alerts at 405, whatever. That way you're watching the chart and it's going to be a market buy or market sell. So that's how you play swing failures. Hopefully this helps those that are impatient and are just looking to get into a trade. These are trigger plays, okay? So you have to wait for a trigger to hit before you can enter. Thanks everyone.